With just over 7 days left before March 15th, this is not the week to panic, but hey, there's a business filing return deadline that is just over a week away, so we got to get our priorities straight, make sure we have all of our ducks in a row for a clean filing, as then we move on to our individual tax returns that are going to be due shortly after. Hello, my name is Andrew D'Amico, CPA Partner here at Ledgerly, alongside Mike Abrahamian. Today I'm just talking to those of you folks who have your own business, self-employed, or you're getting 1099 income, anybody with a 315 filing requirement. So first things first, what's due, what, when, and where, and how. S Corporation and partnerships, those are pass-through entities. We have our 1120S, that's the tax return for an S Corporation, and 1065, that's the tax return you file for your partnerships. And then due on April 15th down here, you have your individual 1040s. It's not an entity, it's just you personally. You could be self-employed, you could just be a 9-to-5er. You're gonna file, both of you are gonna file 1040s. And then C corporations, those are actually due April 15th as well. And me personally, when I first got into the tax game, that never made sense to me. I'm like, well, if it's a business, why wouldn't it be filed with the other business returns? Well, with these two tax returns, they actually kick out something that's called a K1, Form K1, because we're not paying income tax up here. You file the business return for the business activity, any maybe potential credits you have up there. It's going to summarize the information and it kicks out a K1 at the very end. If you're an S corporation, single shareholder, you own the entity 100%. It's going to kick out 100% of that K1 activity. And then you take that and you file that down on your 1040. It's going to be included in your 1040 income, which is then used to assess your tax. Similar to a partnership, now it's going to be, it's in the name, partner. It's more than just one person. So this could happen with a multi-member LLC, and sometimes even if you don't have an LLC, but you're in business with a partner, the IRS will tell you you have to file a partnership tax return. But especially for you multi-member LLCs, check your SS4 document. It's going to guarantee you get that EIN on that SS4 doc from the feds. It's going to say, hey, you are required to fill out a 1065 tax return, and it's going to be due on 3/15. But as it pertains to, let's just say, one individual, your 50% share would come down here. Also with the S Corporation, not going to go into those details, but typically you'll also get a W-2 from your S Corporation. That too is going to get reported on your 1040. Now, why is the corporation down here when the other business entities are up there? Well, a C Corporation, there is no K1. You might technically be employed by your corporation, and you might get a W-2 from this that is ultimately reported on your 1040, but the W-2s are due in January. So it's not like you're waiting on this W-2 to be filed at 4/15. No, the 4/15 filing is for the 1120, and then you're going to owe corporation income tax, currently at 21%. But there's no direct impact because there's no K1 that has to flow in here too. So that's why we care so much about 3/15 if you are a business owner, if you are in either of these structures, because it's going to directly impact where your taxes is assessed down on your 1040. And this creeps up on a lot of people. I've seen it year over year. I can think of 2 examples off the top of my head where taxpayer, I'm doing their tax return, and in their organizer, we have a question in there that's like, oh, did you make any new investments this year? Did you invest in a partnership, XYZ? Is there anything new compared to the prior year? And it was like, oh, I started a business. And she had been hammering to us like, hey, I want to get my 1040. She was just a 9-to-5 or a W-2 person, and year over year, she typically got a refund. So I don't blame her. I would want to file my tax return as soon as possible if I knew I had, a couple grand coming out as soon as I file it. So she wanted to file it as soon as possible. I said, yeah, okay, just give me your docs. We had everything, but then that box was checked, I started a business. So then it was like, okay, let's take a step back, because that could mean a business could be reported on any one of these forms. There's additional schedules on a 1040. So it depends on the type of investment, the type of business, how it's structured. So have the conversation, and sure enough, she had started a rental partnership. She's like, yep, we bought a rental property. It's with so-and-so and so-and-so. And I was like, okay, it's an LLC. Yep, okay. What does the SS4 say? She had no idea what I was talking about. I'm like, why don't you talk to your partners? Because they had a separate accountant. And sure enough, there was a partnership that was getting filed by a different accountant. And that accountant had put this return, if I use a different marker, they had put this on extension. So now their partnership return wasn't due until 9/15. So if she's not getting this K1 until 9/15, I can't possibly file her tax return by 4/15 because she wasn't going to get her K1 until well after this date. So by default, we had to put her on extension. That was to 10/15. As bad as she wanted that refund, and I wanted to help her, I can't change the IRS rules and her sources of income. But that's one thing to keep in mind for any of you who have a business or a rental property or whatever it is that's going to impact your 1040. You want to make sure you have your 315 plan in place, because that's going to play into your 415 plan. So that's a bit on the background. But now specifically talking to, it's March, I believe it's March 7th. What are we going to do if, especially for you people who haven't gone on extension yet, or filed the return, and you got just over a week left? What is there for you to actually do? What is out of your control and what is in your control? And we'll try and keep it color coded here. Well, out of your control, prior year activity. In this case, it's early 2026, but your 2025 activity, I'm talking past transactions, there's no wiggle room there. Most of us are cash basis taxpayers, so all the money that came in and all the money that went out for your business, it is what it is at this point. There's no changing it. What's done is done. You can't control the IRS rules, specifically their deadlines, and really you have very limited capacity to affect your ultimate tax bill. So I'll say your tax outcome, because we get people every year that come to us in February or March and they're like, yeah, I made a lot of money last year. What can we do? I want to wipe out this tax bill. My friend, I feel for you. I apologize, but 90% of tax strategy goes out the door once January 1st hits, because now we're on to the new year. Yes, there are a few things you could do, but to wipe out a $100,000 tax bill 3 months after the year is already closed, your options are going to be limited. Not saying you can't reduce it, but it's very hard and likely not going to be able to get rid of the whole thing. So it is what it is. That stuff's out of your control. But what can you do as a business owner in the new year right up before you're filing? I'd say primary number one, it might sound stupid, but communication with your CPA. Although our strategy might be out the door, we should be aligning with them, especially if they were advising us the last year, on our strategy. Are we doing any elections? Elections, I mean by that, bonus depreciation. Are we opting out of bonus? Are we making the de minimis safe harbor election, expensing everything under a certain dollar threshold? Grouping elections for you rental property owners, real estate professional, is that part of your rental strategy? There's a few things there, but elections, be aligning, making sure that everything that your CPA told you about, they're actually doing on the tax return, and that's going to get squared away. Also, the decision to file or extend. Have you given them the books already? Do they have everything they need to actually file your tax return? And even on the flip side, and even if you do have the books and everything over to them, do you want to pay for an extension? You reduce your audit risk by going on extension. Extended returns are less likely to be audited. I don't have the exact number, but that's a benefit of going on an extension. Or are you in that category of people who haven't caught up on their books for 2025? You still don't have them ready. Let's not do a rush job. We can file an extension, but even if we were to go on extension, we want to make sure we have our payment plan in place, right? Are we going to make a payment with that extension? Are we thinking we're going to have a severe tax bill? Do we know how much we're going to owe? So payments, and I'll say potential tax liability, those are things you could figure out right now. And once you have that number, you want to be working with your CPA. Okay, how much should I be paying in to limit my exposure in terms of interest and payments? In terms of interest, underpayment penalties, late payment penalties, we want to reduce that risk right now. But it all starts with good bookkeeping. So unfortunately, we don't have control over these things. But in these last 7 days, talking with your accountant and aligning on all of these things. And to put it perhaps maybe a bit more succinctly, we'll just say priorities for you. Number one, all information and docs should be to your CPA by now, because these last 8 days, we can't figure out what our potential liability is without good books, without complete books. We don't know how much we should be making in payments if we don't know our potential tax and how much tax we've already paid. So it all starts with that good bookkeeping and making sure that your CPA is in the loop and you're not keeping them in the dark. They can't tell you what to pay if they don't know what you made. Number two is aligning your 315 strategy, which again, after the bookkeeping, we want to know what kind of estimates and or extension payments we're going to be making federally, at the state level, at the local level. And think of New York City, they charge their own tax. I'll bring up here as well for your CPA filing your return. Those elections, you want to make sure that they're getting included on the return and it's not going to blow up the strategy that you talked to your advisor all 2025 about. You don't want them missing any elections. And then lastly, number three on your to-do list is now following up and coming up with your 415 plan. Go back to my first picture. If you know that you have all of your income, you got W-2, 1099s from interest, dividends, maybe you sold your home, you got all these income sources, but then that last piece for you business owners is, okay, what does the K1 look like? And how is that going to impact my 415 filing? And I didn't write it in here, but also, are we going to file or are we going to extend? Right? Are we going to get this return done in the next 8 days? Now, if you've been listening to this and you're like, oh my God, I haven't done any of my books, don't try and rush and get it done in 8 days. That's not smart. Make a good faith estimated payment, but go on extension. Extension gives you the time to go back, clean up your books, make sure you have accurate numbers. We might not be able to purchase a vehicle and 100% bonus depreciate it to get a huge write-off, but we can go back and uncover deductions, go back through your statements. Hey, if you've seen us on accountable plans, is there anything you paid personally out of pocket that was for the business? That could be a business deduction. Are you taking the home office? Do you have your auto mileage log? Right? These you might be able to uncover expenses or extra deductions. You can't change what actually happened, but you can surely go back and make sure that you picked up everything that you're entitled to. This last week is not for getting cute and making things up and taking fringe or aggressive deductions. No, this is compliance. We're doing everything right by the book and not putting ourselves in harm's way. And ultimately, we want to make sure that we're not missing the deadline. If you do go on extension, you have to actually file an extension. You don't just say, I'm going on extension. No, you file the extension. And again, you make any extension payments to help you bridge the gap on any potential tax you think you're going to owe. So if you're not one of our clients and you don't have your plan in place and you're freaking out and you don't know what to do in these next 8 days, please, we'd love to help clear the area and give you some guidance. Get over to our website and book a discovery call, and we can tell you what options you have at your disposal, maybe get that extension plan in place. But don't do this blind. Don't sweep it under the rug. Don't put it in a drawer and forget about it. This deadline is important because if you don't address it, you could be putting yourself for a lot of interest and penalties that could be easily avoided. If you found this video helpful, please, it would mean a lot. If you subscribe to this channel, leave us a like and keep following us and being on the lookout for some more free tax game from us. Appreciate it, and we'll see you on the next one.